Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Newmont Corporation Annual Report. Newmont Corporation offers a diverse range of businesses and services that cater to the mining industry. The company's primary focus is on gold production, but it also explores for other metals such as copper, silver, zinc, lead, and others. With operations spanning across multiple countries, Newmont provides various services including exploration, production, and asset management. The company's extensive global presence allows it to offer a wide range of businesses and services, including gold production, copper exploration, silver mining, zinc extraction, lead mining, other metal exploration. Newmont Corporation's operations are spread across 15 countries, demonstrating its commitment to providing comprehensive mining solutions worldwide. Unfortunately, I do not have access to the text you provided. However, I can still provide a general overview essay on what could cause a stock price to skyrocket. The stock price of Newmont Corp has seen significant growth over the past year, and there are several factors that may be contributing to this trend. One possible reason is the company's strong financial performance, including increased revenue and profitability. This can be attributed to various factors, such as rising gold prices, improved operational efficiency, and successful exploration efforts. Another factor could be the company's commitment to sustainability and environmental responsibility. As investors become increasingly aware of the importance of ESG, environmental, social, and governance considerations in their investment decisions, companies that prioritize these issues may see a boost in stock price. Newmont Corp has made significant strides in this area, including implementing renewable energy sources and reducing its carbon footprint. Additionally, the company's strategic acquisitions and partnerships may also be contributing to its rising stock price. By expanding its operations and increasing its market share, Newmont Corp is able to increase its revenue and profitability, which can lead to higher stock prices. Finally, changes in investor sentiment and market trends may also be playing a role in the company's stock price growth. As investors become more optimistic about the future of gold mining and the overall economy, they may be more likely to invest in companies like Newmont Corp, driving up its stock price. Newmont Corporation market capitalization of $135 billion is significantly larger than the average industry peer of roughly $4 billion. This shows that Newmont Corporation holds a significant advantage in their industry. Newmont Corporation trades at a lower price-to-earnings ratio of 19 times and a higher price-to-book ratio of 4.04 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 47% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. Although shareholder equity has increased, the share count has risen while revenue is declining. This raises concerns that equity growth may be driven by dilution rather than business performance. The sustainability of the business model remains unproven. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline for Newmont Corporation can be categorized into several key areas. On the growth side, commercial production at Ahafo North project and increased sales from various operations in the Peñoles and NGM segments have contributed significantly to revenue growth. Additionally, the acquisition of new transaction sites, such as those from the Newcrest deal, has also driven revenue growth. However, there are also several drivers that have led to a decline in revenue. The Red Chris segment experienced a 10% decline due to lower gold and copper production, while the Teleco segment saw a significant decrease in sales of $219 million. Furthermore, the Yanacocha segment suffered a substantial revenue decrease due to lower gold sales and impairment charges. Other factors that have impacted revenue growth or decline include inflationary pressures on costs, which have deteriorated underlying cash flows from higher costs. Changes to geological models impacting expected metal grade and recoveries have also affected revenue, as well as strategic evaluations regarding the use of capital, leading to project sequencing changes. The net income of a company underwent significant changes between 2023 and 2025. Initially, the company incurred a loss of $2,467 million in 2023. However, this trend reversed in 2024 with a net income of $3,381 million, marking an increase of $1,786 million from the previous year. The upward momentum continued in 2025, with the net income rising to $7,167 million, representing a substantial growth of $4,700 million from 2023. The profit margins also experienced a notable improvement during this period. In 2023, the company's net income margin was negative at -21.2%. However, by 2024, it had increased to 18%, indicating a significant turnaround in profitability. The trend continued in 2025, with the net income margin expanding to 31.4%. This substantial increase in profit margins can be attributed to various factors, including cost-cutting measures and revenue growth strategies implemented by the company. The company's financial performance indicates a consistent trend of generating positive operating cash flow. For the years 2025, 2024, and 2023, the company reported operating cash flows of $10,334, $6,318, and $2,754 respectively. These figures demonstrate that the company has been able to generate sufficient cash from its operations to meet its financial obligations. The absence of any indication of negative operating cash flow for these years further reinforces this conclusion. Overall, the data suggests a stable and positive trend in the company's operating cash flow. The performance of various segments and regions within the company has been analyzed. On a positive note, Ahafo North in Ghana and Formal region have shown good performance, with the latter benefiting from the diversion of resources from NGM. However, several regions have underperformed or faced issues. The Americas Business Unit, Africa, Asia-Pacific Business Unit, and Australia have not demonstrated any notable achievements, suggesting a lackluster performance. Additionally, NGM has been plagued by mismanagement issues. Unfortunately, there is limited information available on the performance of Ahafo South in Ghana and Newmont's overall segments/regions performance. Newmont Corporation's management is optimistic about the company's future prospects. They point to increased gold and metal reserves, expanded operating jurisdictions, and opportunities for growth as indicators of a positive outlook. To capitalize on these opportunities, the company has implemented a portfolio optimization program aimed at divesting non-core assets and focusing on higher return investments. The strategy involves investing heavily in capital expenditures, with $2.666 billion spent in 2023 to drive operational improvements and strategic transactions that create value for shareholders. Management is also focused on increasing production and revenue across various segments, including gold, copper, and other metals. However, the company acknowledges potential risks related to environmental remediation obligations and tax loss carryforwards. Overall, Newmont's management is committed to driving growth and improving financial performance through a combination of strategic transactions, operational improvements, and investments in capital expenditures. Acquisitions and divestitures. Overview. Newmont's acquisitions and divestitures have been significant over the past few years. The company acquired Newcrest Mining Limited on November 6, 2023, for $13,549 in a fully stocked transaction. This acquisition marked a major milestone for Newmont, expanding its global presence and increasing its gold reserves. In addition to the Newcrest acquisition, Newmont has made several other acquisitions, including sites acquired through the Newcrest transaction. However, the company has also divested several reportable segments, including Telfer, Akium, CC&V, Eleanor, Porcupine, and Musselwhite. The divestitures were completed in various quarters of 2024 and 2025, with some projects being indefinitely deferred or sold. For example, the Yanacocha Sulfides development project was put on hold due to equipment being sold. The Greatland option was also affected by the sale of Telfer in Q4 2024. Overall, Newmont's acquisitions and divestitures have been a key part of its growth strategy, allowing the company to expand its operations while also streamlining its portfolio. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In terms of dividends, the company has consistently paid out $1 per common share in recent years, with an additional payment of $0.26 declared in February 2026. This demonstrates a commitment to returning value to shareholders. In addition to paying dividends, the company has also implemented significant share buyback programs. With authorized stock repurchase programs totaling $6 billion, the company has made substantial investments in buying back its own shares. As of the date of filing, the company had already repurchased over 672,232 common shares worth $3,624. This strategic move not only boosts shareholder value, but also reduces the number of outstanding shares, potentially increasing earnings per share. There are concerns about inventory buildup or supply chain disruption in the mining industry. One of the primary concerns is the potential for stockpile and leach pad inventory adjustments, which can lead to significant financial losses. For instance, at Telfer, there was a temporary cessation of tailings placement due to seepage points detected on the outer wall and around the tailings storage facility. Additionally, supply chain disruptions are also a major concern. The company has experienced disruptions in its inbound and outbound supply chains due to various factors such as critical equipment failure, shortage of critical parts, services, and equipment, and extreme weather conditions. Furthermore, there is a risk of unpermitted off-site discharges, slope instability, mine pit erosion, and structural failures. The company's inventory levels are also a concern. The inventory of gold doré at Tel Morna increased from $135 million in 2023 to $152 million in 2024, while the inventory of gold doré at Con Mine decreased from $11.8 billion in 2023 to $11.6 billion in 2024. However, this still represents a significant amount. The company's financial statements also highlight concerns about inventory buildup and supply chain disruption. The inventories, stockpiles, and ore on leach pads have resulted in significant losses, with a decrease of $-454 million in 2025 compared to $-534 million in 2024 and $-187 million in 2023. In conclusion, the company faces significant concerns about inventory buildup or supply chain disruption. The potential for stockpile and leach pad inventory adjustments, supply chain disruptions, and high inventory levels all contribute to these concerns. That concludes the financial summary for Newmont Corporation. Feel free to comment below, and I will be happy to answer them when possible.